What's up, everyone? Excited to give you this video today about SOFI. So SOFI is down 7% today in reaction to news that shares could be negatively affected. The company in general could be negatively affected by the Biden administration not being able to extend the student loan memorandum, which would obviously hurt consumers and especially those consumers, that are on SOFI's platform. Um, so with that being said, I'll jump into the video. What I'm going to do today is just cover briefly social media mentions, cover the downgrade, cover when the student loan repayment will, be forced, and then I'll cover the chart, give a give a price prediction, and then I will go through the fundamentals of the company. So as you can see here for stock twits, SoFi is still a very active name on here. So it's the sixth most talked about stock on stock twits. So the community is still, mentioning and chattering about this stock a lot. So definitely not seeing that falter with shares moving lower about 7% today. But in terms of this downgrade that we're seeing from the stock, it's come across for a couple analysts, not just one. Um, so Bank of America and Piper Sandler both downgraded the stock to neutral, um, citing issues in valuation and credit quality. And consumer spending concerns are stemming from the resumption of student debt payments, which will obviously, hurt consumer spending and hurt SoFi, especially because their users are, um, you know, really younger people that are more likely to have student debt. So interestingly here, the student loan repayment starts in August 31st. Um, but realistically, most borrowers won't immediately make or force repayments to be made. The um, the education department's vast student loan servicing system will have to generate billing statements and send them to borrowers. Those bills must then provide borrowers with a sufficient window of time to make their first payments. So, practically, student loan payments won't be, initiated until September or October. So, still some time here, but analysts are kind of getting ahead of this news and, predicting a drop in consumer spending as student loans repayments come back. So that's kind of the negative news that's pushing the stock lower today. But let's take a look at the chart and see what we can kind of tell and try to give a price prediction for shares. So shares came down to this 860 level today and bounced higher. This doesn't surprise me as this 860 level was firm resistance in the past. It's basically where shares had topped out in August. It's also almost where shares had topped out in February. Any support and resistance level is a range, so it doesn't touch exactly, but it's pretty close here. Um, so obviously, shares had moved above this level earlier in the week, and that is definitely a good sign to see a break of resistance. And I would say that now that we've come back down to this level, this may be a good buying zone for the stock, especially when you consider that there is very bullish momentum for shares. So obviously, we're above all daily moving averages, but the 50-day moving average crossed above the 200-day moving average. And for those that don't know, that's called a golden cross. It's by far the most watched moving average indicator, in technical analysis. And it just implies bullish momentum. So having the 50-day cross above the 200-day is a really good sign for the stock and should help push shares higher. And I would really say, obviously, we got the downgrade today, and that's the story that everyone's running with. But at the end of the day, the stock was extremely overbought according to RSI. So I see this move lower as a healthy move, and likely will continue. Is just a some consolidation in a large uptrend is very healthy for a chart, and I would say this is a healthy pullback. And the fact that we're still holding support at about 850, 860, is a really good sign, and I think shares probably move higher from here. In terms of how high they move, let's take a look at some past resistance and try to determine where shares are headed from here. So we IPO'd at about, 10 bucks, which is where shares had topped out this week. So you could say shares are probably moving to $10 again pretty quickly. Obviously, that's not much upside from here. Um, but with that being said, it's still a level you should be cognizant of and look out for on the chart. If I can get this line to draw straight. So about $10, probably some resistance there. We pulled back from that early in the week. If we're able to move above that, the next kind of major level of resistance, I would say, would be at about $13, which is where shares had topped out once we IPO'd. So as you can see there, that's where shares topped out. Um, Let me just draw this line. Sorry. It's also where shares had bottomed in August of 2021. So definitely seems like a significant level there. Multiple touch points. Anytime we see multiple touch points on a resistance or support level, that definitely signifies that that level is strong. So you're seeing that's where shares bottomed in August of 2021. Seeing that's where shares bottomed in May of 2021. Also where shares touched in December of 2021. So definitely it's a significant level there. In terms of how I'll be trading it, um, going to be buying some calls at this 850 level likely. Obviously we came down to it, held, moved higher. I really want to see RSI be not overbought before I jump into those calls though. So I'm gonna wait until I get that signal from RSI. So going to wait till we come down to the support level. I think we likely move higher. We might consolidate at 10, but I believe given the momentum and if the general market likely holds up, which the charts would say it would, we could see a move up to $13 over the coming months. So my price target is about 13 bucks. I would say we probably hit that over the next year, given no crazy news events. Obviously, any large news event can kind of throw technicals out of whack. But with that being said, I will move in to some seasonality trends that I'm seeing for the stock. And this graph here shows the average return of the stock for each month. So it's based on its 2 years of pricing history. So if this can load, basically this can kind of tell us. I'm going to go back to the other chart. This will tell us what months the stock does poorly in, what months the stock does good in. So as you can see, on average, in June, shares do drop 17%. And in July, they are positive by 8%. Obviously, only 2 years of data here, so I won't be, too hard, or I won't give this too much credence. But it is notable to look at and see. Okay, we are moving into a bullish seasonal month in July here. So technicals line up. We're going into a bullish seasonal month. I do think that could be a positive catalyst for SoFi. But with that being said, I will jump into the fundamentals of the company because I know there are a lot of long-term holders of this stock that are watching right now. So I will basically break down how the stock stacks up to its peers when we look at a couple major metrics. So this here is Seeking Alpha. They basically put price or valuation growth, all these factors relative to peers. So when you compare SoFi to peers, Seeking Alpha is giving them a D plus, and I really do believe in this system. It's pretty good. So I definitely do trust their grades. But with that being said, let's still look into the valuation a bit more granularly so you can see what is actually giving them this low grade. So first off, they're technically in the financial sector, which is making all these grades pretty poor. Obviously, the financial sector doesn't have the growth prospects that this stock does, hence the A plus growth rating. But with that being said, their price to book ratio is only 1.7, which is honestly awesome. And for those that don't know, 1.7 price to book basically means that the assets on their balance sheet are 1.7 times the value of their market cap. So the value of the company. So that's pretty good there. And obviously the sector median is about one. So the financial sector is known for having a pretty low price to book ratio relative to other sectors. So definitely a tough comp there, and we're still seeing it stack up decently well. So definitely good sign there. Obviously, the company doesn't make money, so I don't have much to go off of in terms of PE. Price to sales 5.2 compared to the sector median of 2.3. Like I said, this is a tough comp because it's in the financial sector and it's being compared to that sector, which obviously is known for its lower valuations relative to the market. But with that being said, the financial sector is also known for low growth metrics, right? So that's kind of where SoFi shines. So SoFi year over year revenue growth is 51%. So that's for the past 12 months. And then in terms of forward revenue growth for the next 12 months, the firm is projecting 34% growth. As you can see, this 51 for the last 12 months is well above the sector median of 6. In the next 12 months, 34% growth is well above the sector median at 5.7. EBITDA growth looks great, though, even better than the revenue growth numbers. EBITDA growth for the next 12 months is in at 150% roughly, which is above the 5% sector median. So all really good growth numbers, and we're seeing good growth numbers. That's needed for any stock that isn't profitable. You really need to have growth be kind of rationalizing your high valuations, right? So definitely good to see that the growth is rationalizing, those high multiples that investors are paying for the stock. So anytime I see a growth stock, or a quote unquote growth stock that doesn't have great growth numbers and has a super high valuation metric or a multiple, then I get worried. But here, it's not that situation because we have obviously the company that doesn't make money, but the growth is there to rationalize that. So that is always very, very crucial when you're analyzing growth stocks. So let's look at some analyst revisions. For those that don't know, basically, there's a covering analyst for every stock, every major stock out there. So Goldman Sachs, JP Morgan, they'll have their own analyst. That's job is literally devoted to projecting EPS and revenue for the company. And they'll change these EPS and revenue estimates based on company specific news, larger market news, consumer sentiment data, so a wide range of factors go into the stock. So into the revisions. So this shows the revisions over the past 3 months, and they've been net positive. So net, we're seeing one revision for EPS, two up revisions to one down. And then revenue, we're seeing one up revision to two down revisions, which is a net positive of 6 up revisions. So definitely a great sign there to see that analysts are becoming more and more bullish on the stock. That tells you that, those whose job is to project, revenue metrics, EPS metrics, are becoming more and more bullish on shares based on the company's fundamentals. So that's a great sign. That definitely gives me confidence that this company is, moving in the right direction. So with that being said, went through a lot today. I hope you enjoyed that video. Thanks for watching. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.